Hey, what's up traders? My name is Blake, and in this video we're going to be interviewing the head trader for Lux Trading. Lux Trading has had some massive improvements recently, so we're going to be covering all those in this video, one of which includes a brand new dashboard, which I'm really excited about, so we can actually see how much more we have to go before we have a full loss, or how much more we have to go before we have a full win with their accounts. As always, I have the timestamps both in the description as well as in the video player itself, and as always, we have the discount code VVS, which are going to give you 12.5% off any of the 3 Lux trading options. So the top link for that is going to be in the description below. Let's go ahead and get started with the video. All right, so I'm back here with Rob again, who is the head trader for Lux Trading. So happy to have you back on.
Thank you for having me, Blake.
Awesome. So there's a couple points we want to talk about for some updates with Lux Trading. Let's go ahead and start off with that. Do you want to talk about the first point?
Yeah, first what we did is we made the traders dashboard because a lot of people they asked us to have this, so we designed it. It's finally there. Most of it is on it for the moment, and we just need to actually to put some more things on it. But the most important information is already on the dashboard.
Awesome. So I'll go ahead and have an image right now on the screen so people can take a look at what that looks like. What are the main features of the dashboard? Why would someone want a dashboard in the first place?
Now, yeah, they want to see, we're working with relative drawdowns. So it's very important for them that they don't need to do the calculation themselves. So it's automated. So they can see, okay, where, let's say, their stop loss is going, when their account is growing, their equity is growing, and they also see where the target lies. So you can follow that, everything on the dashboard, and there's also some other features on the dashboard.
Yeah, I think that would be really, really helpful as you progress with your account, to be able to see where your maximum loss limits are and to be able to know exactly how much room you have. It's good to be able to check that so easily on the dashboard.
Exactly. And then there is also another feature like Trading Central. Yeah, so we also see that some novice traders are still coming to us in order to help them a little bit. We ordered Trading Central. We know Trading Central already for a very long time. In the, let's say, late 1990s, Trading Central was also on our Bloomberg terminal. And we saw that, and there it's a nice thing to have, to know where your pivots are, your support, and resistance. So that's a tool that can be very helpful.
Sure. I'll again have that the screenshot of what the Trader Central looks like as well. And you also want to talk about the stop with the official warning. So what was the changes with the stop loss and with your firm?
Yeah, now before it was like that the trader need to put the stop loss within 2 minutes. We saw that a lot of traders were forgetting that. So we thought, okay, maybe it's better to make something within the platform that the traders cannot forget it. So before you, let's say, put an order in, a market order, you have to put the stop loss in together with the market order. So if people don't know where they have to put their stop yet, put it then, for example, on 50 pips and adjust it later. So we cannot have, let's say, this problem anymore. The people will be disqualified because of this. So there will be actually one rule left, and that is don't touch your 4% drawdown limit because that will take you out of the program.
Right. So that's the only rule now, which is absolutely fantastic. With this new improvement, will it also stop you from placing too large of a risk at one time? Will just not let you place a trade?
Yeah, that's also one of the rules. I mean, before, if you put a stop loss of 400 pips, is not really useful, because probably that will exceed the 4% drawdown level. So if that is the case, it doesn't even let you trade. Yeah, so you have to put that stop loss within the maximum drawdown level.
Gotcha. And that'll do the calculation for the percentage for you, correct?
Yeah, it's all automated, so you cannot exceed that. So you don't have to worry that if it's getting hit, that you will be out.
That alone sounds like an amazing tool to help traders just prevent them from losing. This is definitely something that, especially for beginner traders that aren't so great at calculating risk percentages, they don't use calculators. And this will help them a lot with making them less likely to immediately blow their accounts as well.
Yeah, now that's all the things that we can do, and prevent that will happen. So we will do our best on that side. The rest of the trader, of course, need to do and perform in a way that is good for both of us.
Right, and then there's another thing that we want to talk about with the new broker.
Yeah. So before we were doing the business directly with LPs. And in order actually to be more transparent, we put a broker in between, because a lot of traders didn't understand what an LP was. Of course, I can understand that if you just used to work with a retail broker, then it's the only thing that that is a broker. So we have put, let's say, this broker in between. We still have, let's say, the direct market access to the pool. The broker works actually only as an agency only. That means that they don't have a dealing desk. You go directly into the pool. You do directly the business then with the prime broker. Direct market access. This order is all going to be STP into their ECN network, and that's it. And I mean, we also have those accounts with them. So they have the demo accounts with this broker, as well as the live accounts also go through this broker.
Right, and just to be clear for the new traders, STP stands for straight through processing, ECN, electronic communication network. So generally with these type of networks, they'll have less spread, less that better conditions for the trader. Is this something that people can expect to see with Lux trading as well?
Yes, of course. Okay, there's a difference between, let's say, the brokers who are working directly with the liquidity pool. It has its pros and cons. I mean, market makers can make their let's say their spreads themselves, of course. Also with rollovers, that's a little bit different than, let's say, with a market maker, because a lot of banks are pulling out during let's say the rollover hour, because they don't want to be in there. So you can have let's say wider spreads at that moment. But a simple thing actually for a trader to do is put your stop somewhere that it doesn't get hit, during let's say the rollover time. And after the rollover time, put it back to the level where you had it before, in order not to get stopped out. Because some crazy pairs like exotics, some minors, they widen up much more than let's say the major currency pairs.
The next thing I want to talk about is the 229 trading days that you guys have. So can you explain that in a little more detail? Why do you have the 29-day requirements in the first place?
Now, yeah, we want to see a trader that is consistent, and that's why we said, okay, we need some time to see how someone performs. 29 trading days is like 6 weeks. If we see that this trader is stable, we like that. So then, if you go through this stage, you're going into a live environment with the same amount in the same days, another 29 trading days. The trading days, the same 29 trading days is also because we want to see if the trader is still doing the same as he did in evaluation, than with real money. Because with real money, there's a different environment, first of all, the market is not always acting the same as on a demo account, and also the nerves of a trader is also different, because he now knows it's for real, right? Now, then we have a good, let's say, like a 3-month track record. So then we are confident actually to give this person a decent amount.
Right, and then once you have that decent amount, then it's just all good from there. Then it's a fixed drawdown. Then it's a lot of other. Good things. Yeah,
the first 2 stages are actually the hardest. But if you go through that, then we are also more confident in you that you're doing well also in the stages that you have much larger money under management. So that's the reason why we have that.
Gotcha. And then going off of that, what is the consistency rules that you have, and can you explain them in as much detail as possible? We can have the screenshot on the screen as well.
Yeah, you have to combine actually both things in this two stages. It's like not only your profit target is important, but also the 29 trading days. Yeah. If you start off like getting as quickly as possible to the 6%, that's useless to do. Yeah. Because if you do that within a week, we also expect that you will do it throughout the whole 6 weeks then, the 29 trading days. So actually what you just need to do is make 1% a week. Yeah, if you want to do everything in 6 weeks, but you can take even 3 months, 6 months if you need that. I mean, you're not in a hurry. It's not that we have a limited or that we have a maximum time that you have to reach this target. But if you want to do it in 6 weeks, just do it 1% a week and do it consistent. Don't start, let's say, first with 0.30 lot, and then the moment that you reach your target, that you go back to 0.01. That's not consistent. Yeah, that's now you're only trading actually to get you through the remaining trading days, right? So that's not allowed. If that happens, by the way, we will not exclude someone, but we will notice it, and then we will just say, okay, you have done this 0.01 lot, for example, for the last 4 days. We will take those 4 days away, and you continue as you did before, but you need to make an extra 4 days in order to get your 29 trading days full.
I appreciate that you don't actually disqualify someone for that if they do that. I think that's really helpful, and then I understand why you'd want to see them doing being consistent for a long period of time. And so is this only lot size based, or is it percentage of total risk, or is it just stop loss?
Now, if we see this happen, then we will explain it to the trader, because if we saw also, let's say, as I said to you before, this 0.30, for example, and then they go to 0.03. I mean, that's a very big difference. Yeah, you go 10 times lower, so that shouldn't be. But if somebody goes from 0.30 and then he trades to 0.10, 0.15, then 0.25, I mean, that's consistent. Yeah, I mean, if you're doing in that range, but don't go 10 times lower. Or in order to, we see that, we know all the tricks. We've been here around for a long time, so I mean we know what traders will do in order to to get further. But that's not a thing that we find consistent. We also want you to be consistent later on when the real money is there, and the real we want to see how he performs then as well, in the same consistency room as he did in the 2 stages before.
Right. And so you mentioned the 10 times. Is there any specific multiplicative or any other sort of number that people can reference to know how big or how small, just so that they don't have to worry about it? It sounds like you guys are pretty lax about it.
No, we're pretty flexible in that way. So I mean, if you do half of it and then in between, I mean, that's not a problem. I mean, sometimes the market is not allowing you to trade higher sizes. Yeah, if it's too volatile, then you still want to make a swing, for example, in this volatile market, but you don't want to get in with the lot size that you normally trade. Yeah, you do half the size. We understand that. We do that ourselves, but it shouldn't be, let's say, like 10 times less than you did before.
Got it. Understandable. So we also talked before this recording a little bit about the KPMG. Can you explain what that is, why that's useful, and how a trader can get that?
Yeah, we want actually to certify our traders, from the moment that they come into stage 3 until stage 7, I think, or 6. Then we like to certify them every time when they go up in stage. But eventually, the most important thing is that we want to, audit their performance as well. Yeah. So if they are in for, let's say, 12 months trading with us, then you have a decent track record. Then we say, okay, then we let it audit by one of the big 4, accountancy firms. We have already KPMG as our auditor for our asset management. We will also give that service to our traders, that they will have this KPMG audit report as well. It's much different than, for example, my FX book or FX Blue or what you have, because that's more retail. On the retail markets, it's focused on, let's say, the MT4, MT5, and the C trader or whatever. But I mean, if you want to work later on with a hedge fund or with an asset management firm, they never heard of it. So, but they know KPMG, for example. Yeah. So if you have that, this report, this audited report, it's a big plus if you have, let's say, the ambition to work for a hedge fund or an investment bank or whatever in the future.
One of those, I'm assuming, being Shelton Wealth as well, the 10 million plus.
Yeah, the 10 million plus is the Shelton Wealth. What investors actually give the trader is different than the prop trading account. You know, the prop trading account goes to 2.5 million, but next to it you can also trade the 10 million plus account of investors. Also, that's a different deal than you have, of course, with the prop trading account. Yeah, because investors pay us only a management fee and a performance fee, and we pay from that fee the trader. But aside from that, I mean, if you still have a prop account, we will also audit that. Yeah, I mean that will be audited in the first place. And the other account will be also audited because we do that as a company anyway.
So how does someone, other than you mentioned that they have to be trading for a year with you guys, but is there any other requirements for them to have the KPMG review?
No, that's actually, we want to see some history. So let's say if you come in stage 3, then you already did like 12%, which is not bad. You know, it's not bad at all if you do that in a year. So if you do a little bit like 15, 20% a year, that's already interesting enough to make an audit of that. Yeah. Right. Because a lot of hedge funds are dreaming for this kind of percentage, yeah? Between 12 and 20% a year. So that's already valuable. And also for us as an asset management firm, we would also appreciate the trading like that. Yeah.
Right, and then supposedly that a trader will use that to maybe work for a hedge fund as well. Is there any issue on your side with a trader trading for a hedge fund as well as trading with you?
No, I mean, we know the technology nowadays. You need only one platform, you know, to copy it to other platforms, so it doesn't matter. You can do whatever you want. You can have your private accounts. You can work for other people. You can work for an asset management, hedge fund manager, investment bank, whatever you like.
Excellent. Well, I really appreciate you guys, because it seems like you actually are looking for real good traders. I feel that way with a lot of prop firms, but definitely not every single one. I really appreciate that you guys are that way.
Yeah, no, yeah, that was the whole idea. We also like to spread our risk. You know, the more traders you have, the better it is. Then if you have, let's say, a bunch of good traders, then if a quarter is failing, then and three quarters aren't failing, then you're still making good profits. You know, that's the whole idea.
So if someone's ready to get started with Lux Trading and they use the code VVS, what sort of benefits are they going to get?
Yeah, the first benefits is, of course, that they have your support, because I mean, you're an educator, so that's a good thing. Aside from that, we give them a discount of 12.5% and have to use your VVS code.
Thanks so much for coming on, Rob. I appreciate you highlighting all these new improvements with Lux Trading, and I hope to have you on in the future.
I'm pretty sure that we will speak to each other again, and thank you again, and see you next time.
Thanks so much for making the end of the video. I really appreciate it. If you got any value out of this, don't forget to hit the like button. I really appreciate it. And if you're ready to start with Lux Trading, don't forget to use the code VVS, and it's going to give you 12.5% off any of the 3 options that they have on their website. Again, top link in the description below. If you haven't already seen my other interview with Lux Trading with the same person, I highly recommend watching that. You can find that right here. Thanks so much for watching, and I'll see you guys in the next video.